We were short. We put on our short position yesterday. We saw the press release. We shorted more. Looking at it today, quite honestly, I'm hoping it goes up so I can short more. But from my perspective, because it was nice actually hearing a lot of analysts come out and defending the name, et cetera, because it just shows how much more lower the stock can go. Because if you look at this quarter, there was very little to like about it. And if you look at the guidance, they're now starting to admit to what we've seen from a lot of different players out there that emerging markets are starting to have a problem. Now, that should have been obvious to people coming in, but, this is a tape where if a stock goes up and it has a nice dividend, it has a nice buyback, and, Warren Buffett was obviously buying it, people sort of get behind that momentum, and they sort of weren't paying attention to the signs of it shouldn't be a surprise that demand out of the emerging markets had a problem. Brazil, Russia, India, Turkey, China, all of that slowed down. Well, those are all the countries whose stocks have been getting killed or the currencies have been having a problem. So, to some extent, this just tells me there's a lot more air in this name that needs to come out.
I mean, a lot of people do like the average selling price of $793. That was a little bit above analyst consensus. They like the record profit and revenue numbers. They like the fact that Apple's buying back its stock and Warren Buffett's buying the stock as well, or has been at least. I mean, there are plenty of positives, Dan. So what has you so sure about this negative bet, besides weakness in emerging markets?
Sure. I mean, obviously that's all great, but that's all backwards looking. So if you look forward, what they guide to? Well, they guided to revenues up 45% sequentially. If you look at it over the last 2 years, they've grown revenues 67 to 68%. The last 5 years, 63%. So that's obviously an issue. The biggest thing is, I always go with, look at what a company does, not what it says. They're pulling disclosures on units. Now, they're not doing that because units are doing well. And if you go through the math and you say, okay, let's assume these other segments grow the way they're growing and ASPs grow up another 15%. If you back into what the iPhone units are that they're guiding for next quarter, you're talking about down 15% year over year in December if you back into the numbers. I wouldn't disclose that either. So, and when you talk about services, which is what everybody's bullish on, well, services are driven off of that base of customers you have. And if you're selling 15% less units year over year, obviously that base is going to start to slow down, and that will come in and affect your services business going forward.
But Dan, this thing is never traded at a high multiple. I guess when you think about shorting it over the long term, okay, earnings may come down, but do you really think the multiple is going to come down as well? And I heard what you said about services, but as it continues to move up, a lot of analysts and investors are going to say it deserves a higher multiple as a result of the recurring revenue stream from those services.
Right. Well, as I said earlier, services follows your installed base. If your units are down 15% year over year, that's obviously going to affect your services in the future. So that's the first thing. The second thing is you have to remember, the smartphone market has never had a down year. This will be the first down year in history. So, the example I would give is, and maybe it's not the best one because it's a long time ago, but look at the PC industry. The PC industry grew last in 2011, and then when you hit sort of saturation and people started to replace their PCs over a longer period of time, you didn't have any growth in PCs in 2012, 13, 14, 15, 16, and 17. This will be the first year that PC units have grown since 2011. So if you look at smartphones, you've got about over 4 billion people on the planet out of 7.5 billion people already have phones. The phones have cameras, they have a lot of great capabilities, much like a PC back in 2011. And I think what you're going to see going forward is that, those replacement rates are going to continue to stretch from under 2 years when people would replace a phone to now it's over 3 years, and I think you're going to continue to see that move out in time.
Dan, did PCs have such strong price inflation going into that negative year? And the other question I have is on their buyback. I mean, how much are you willing to go up in front of that huge bulldozer that is their cash balance and their buyback?
Well, I look at it this way. Think of IBM. They've had a great buyback for years. They've had a great dividend. That was the last big tech stock Warren Buffett bought. By the way, 2011 was also the last year that they grew revenues. So to some extent, I'll take the buyback and I'll put the secular trends of smartphone growth going negative for the first time in history against that. And if you've got growth going negative, then that's a bigger issue. And if you look at the PC industry as an example, those multiples have compressed when the growth rate started to slow down. So the ASPs going up is great, but to me, I look at this and I go, all right, so do I really believe they can continue to raise ASPs and not have a negative impact on units? Well, you're seeing it in the guidance, right? The ASPs in general are moving up, and the guidance has gone ahead and moved down pretty dramatically for the fourth quarter. So from my perspective, that's where the issues come in.